Okay. Wonderful. Yay, I'm so glad you are all here. For those who don't know me yet, or maybe just need an introduction, I'm Lucy Hunt, the editorial and experience manager here at Dreamers and Doers. And I am so excited to be here in conversation with you and with KK Hart on how to build wealth in a way that's intentional, sustainable, and genuinely supportive of the life that you want. KK Hart is our amazing host today, entrepreneur, strategic investor, and advisor whose work is all about helping founders build real, lasting financial freedom. She brings a refreshing and deeply practical way to think about our perspective of wealth building. And instead of relying on traditional startup playbooks, she helps founders shift into an asset manager mindset, focusing on ownership, cash flow, and growth that compounds over time. She's helped build and scale multi-million dollar brands and has consulted for companies like Liquid Death, Create and Cultivate, MindBody, ClassPass, and more. Today's session is about reframing what's possible, and KK will walk us through how to move beyond that hustle and high risk model into intentional, sustainable wealth building using her FIT formula, designed to help you build not just a business, but a legacy. I'm so glad you're here, KK. You can go ahead and dive in.
Yeah, I'm really glad to be here, you guys. I said this at the top, but let me just make sure you know this really is a conversation that I'm excited to have with you guys. I don't pretend to know everything, but I like to be really honest and open about, why my heart is for sharing this. And honestly, some of my greatest successes, I was bragging to Lucy before you all came on, I also consider equally as important that are personal and professional. And so when I think about this community, one of my favorite things about being a part of it has been getting to know all of you. And like often there's one skill set that I'm really good at, and one skill set that my friend in Dreamers and Doers is really good at, and together we're better. And one of those for me was completely not this. So this is why I'm not sharing about becoming a mom, sharing, how to become this amazing family that I accidentally on purpose did after joining Dreamers and Doers. But today, my heart is to help you to see that there may be alternative paths for your growth and specifically for your wealth that may be something you want to consider because that actually was my success and my prowess. So much of what I do, I call getting your assets together, but I basically run all of the businesses I own, operate, and invest in like an investment fund. And so it's been very financially successful, but it's also been really personally gratifying. And so just to throw a couple numbers out there about why this is the time to have this conversation and maybe some of the things that you have in the back of your head about growing your wealth and kind of doing it in a way that feels really authentic is that, women control 85% of spending. We all know this. But I think the way that the traditional financial industry has approached women is so not the one that I want to be a part of. And so this is not meant to be financial advice. It's really just kind of a how I grew this, how I built this, with a lot of pause points for questions and a lot of thought process that maybe you haven't had or haven't had the time to think through. And my reasoning for this is that we know the statistics, right? We know that we control so much of spending, and yet we're not really reaching the peak ownership levels that we would like, or we're not getting the exit we want, or the businesses that we're building, they're not always meeting that $1 million in revenue, minimum commitment for, venture capital. And so when I started thinking about the way that I believe growth could be really successful, I kept coming back to this phrase called generational growth. And the concept around it is that it's so much more than just wealth, right? It is about living a life that we love. I call it mind, body, business, and self-care, but it's about going beyond financial literacy. It's about ownership. It's about getting into the tangible, compounding ways to be successful. And that means it's okay to be multifunctional. It's okay to be multifaceted. It's okay to do more than just one thing with your money or your business. And the more I started to have that conversation, the more people asked me what on earth I was talking about because it is not what you hear in traditional financial media. And so I want to give you an idea of the many things that I do on a regular basis with regards to my own investments, my own portfolio, my own businesses, and my own success. So everything from being an entrepreneur myself, most of the businesses I own have been through acquisition, which is one of my favorite things to talk about. And I'll definitely be asking you guys questions about have you considered acquiring businesses or being acquired yourself? It's something that a lot of people are, I think, this last decade of my career, it's become much more interesting and exciting, but I think there is more to that story. I've advised in over 300 million in exits. And I can tell you that like most of the clients, all women that I've helped do this with, They either wish we had started the work and the growth work earlier, or they thought the exit would be better. Or the money was fantastic, but it didn't solve the personal issues. And so I call this the human energy crisis. I stumbled across that phrase years ago, and it really kept me up at night to think about what truly drives success. And it wasn't always about the money. It wasn't always about the exit. It wasn't always around the business or what you're creating. It was really about this mix of things that, made us successful inside and out. So when you see some of the things I'm invested in or involved in, you'll see that they almost seem like they'd be polar opposites, but I've used this portfolio approach, right? This very curated approach of things that work well together to diversify to 15 or 20 different ways that I earn so that I don't have one thing that I'm leveraging. I have an ecosystem. So other things that I do, I am a startup investor, but I only invest in startups that I am a strategic advisor in or strategically aligned with regards to the businesses that I own. I love business acquisition. Like I said, it's my favorite thing and probably the best way that I've grown. And so if anyone's curious about that, I'd love to share more. I started my career consulting, advising, selling everything from pharmaceutical drugs to biotech. And I found that my background as a behavioral scientist actually made me very good at it. I use my powers for good now, I always say, but it allowed me to really leverage this idea of what to do first and what to do next, both as an advisor and also for my own businesses. But it also got me really curious about alternatives. So I absolutely am invested in stocks and bonds and all the kind of basics that people tell you about. I also really got curious about different ways to use money to grow. And so I was a limited partner in venture capital, recently became a general partner in private equity. That means I take a piece of the management. I mentor people in how to acquire businesses. I love precious metals and I like just about anything alt. I'm not really like the arts buyer type alternative investor, but anything that can generate meaningful profit while still being like very sustainable and heart led, those are things that get me up at night. So, what I want you to take from this is like one or more of these may be of interest. You're welcome to please drop it in the chat so I can double click on the things that you want to hear about. But that's just so you know that I'm coming with the perspective of, yes, having the financial prowess, but also having the diverse interests, which I think actually made me more successful. And oftentimes, the reason I share this is I think we're often fed this one kind of focused area of success, and it's like build the one business, have that one exit, invest in this one index fund, you'll get your 4%. And I actually respectfully challenge that. When I talked about generational growth, I really meant it. It's both depth and also breadth. And so that really comes down to three things that I think are really important to talk about today. Number one is ownership. And a lot of times we don't have full ownership, whether it's knowledge or literal intellectual property to be able to get to those big outcomes financially that we would want. I believe that, one of the best things that we can do for ourselves, particularly as women, by the way, is to have immediate and compounding returns on our income streams. So that means things that cash flow or make money from day one, but that also provide you the nimbleness and flexibility to accelerate some of your wealth goals. I honestly can't believe I'm talking to you guys about this today. For the majority of my career, I started a little over 20 years ago. I was head down, working, putting the money aside, not spending it, living drastically under my means. And I can't believe 20 years later how that's accumulated, truly. And this is as someone who's a minimalist. So I don't spend a lot. I don't really like to buy things. I'm not really into that level of flex. And so for me, what I really think about is the power of compounding investment, right? And also the power of consistent investment, and also the power of like loving the thing that you're doing with your money. And so I want you to hear that all three of these things play a factor into your success. The other thing I always really come back to is an asset that you can control is really better than an asset that you have some semblance of interest in. So, for instance, when you own your assets, when I own a business, I have so much more that I can do for that business than when I'm just an investor. I love being an investor, but it's actually a lot different with regards to how I can affect the outcome. And I think that sometimes is more empowering to know that, yeah, it takes more cash to bring to the table a lot of times to be able to buy an outright investment or an asset. But what I also find is that control allows me to be nimble, to either fail faster or to go forward faster, and also to kind of write my own way of defining success. So it's less about the top line revenue and it's more about the bottom line profit. Or it's less about growing externally and it's more about growing internally, where we're using those same pieces of the asset, like the email list, for instance, and we're generating more revenue with the same groups of people that we've been communicating with. So those are really stealth ways to grow that I think often get overlooked. And then lastly, when I think about diversifying, there's really so many reasons for it, but a big part of that is being less reliant on debt, being more robust in, I think, having different things that can have high upsides and downsides. I'll give you an example. I have a case study of this, but I own both product businesses and service businesses, B2B and B2C and B2B2C, which means there are certain cycles where the product business is performing better and is in a better market than the service business. Or, B2B has a very different sell cycle than B2C. So if I'm able to have a portfolio approach to my growth, I'm really able to have the diversification with regards to income, but also tax strategy, also sales cycle and funnel and upside. It all comes in at times that I think you can be a lot more thoughtful with. And that diversification means I'm not just leveraging one layer of success, right? I've said this a couple of times already. I've find success personally and professionally through having multiple things. Examples of tangible assets would be, of course, businesses. Um, we could have a thoughtful conversation about whether or not real estate really is a tangible asset that is investable. It's quite challenging to these days, but if you bought in the past and have a cash flowing real estate business, I would say that would be another tangible asset. It could also be, so to go deeper, like a product. So product-based business is tangible versus if I just buy a website, that's intangible. Trying to think what else would be really expressly tangible. It's also, so this is an interesting way of talking about this, but like stocks are not tangible assets for you. It's fractional ownership. You own a percent of a percent of a percent of this dollar figure that's been, created essentially from price to earnings ratios. Whereas when you have true ownership in something, you feel it, you see it, you touch it, you influence it. It is much more actionable. And so I think tangible assets are not necessarily better than intangible assets, but I would say balanced with intangible assets could be really beneficial. So let's go a little bit deeper on this concept of going for growth. I think when I think about maybe some of the questions I've seen in the community, um, I'd love to talk about why sometimes it's not just about founding a business, but also about thinking about that business like an asset manager, which means maybe you're the one acquiring instead of hoping to be acquired. I think so many times we have this thought process around how we want our growth to go. And I've found that a lot of times when I'm advising founders that have that mindset, the second they start thinking about the business for the long term and having optionality, they think very differently, right? We're in the middle of this unparalleled economic moment for women. We're supposed to, by 2030, inherit a ridiculous amount of assets and money to go along with that. But I want us to be thinking less about one shot to the moon and more about several. And then also, if we're thinking like that, then maybe the asset, although technically tangibly intangible, is not necessarily the product or the service, but it's the target client that we work with that we can use as the asset through it all. For me personally, that was the through plays. My first business after consulting for years was a marketing agency that really specializes in growth and implementation. So I would say where a lot of coaches and consultants focus on, like, let me give you the strategy, here's the book and the manual. I was the roll up the sleeves consultant that actually did some fragment of the work before fractional was a thing. And what I always found is I attracted businesses with the exact same ideal client prototype. So when I started acquiring, it actually came from a really weird, horrible place where I was married and divorced before I was 30. And it was really tough because I had had all the financial success. And then here was the struggle, which was like, personally, what am I going to do with all this money if I'm not happy at home? And so I started acquiring businesses. I acquired my first four pretty rapidly, and they were dance studios that I like went to build up my self-esteem. What shocked me was how incredibly profitable I could get those, but that the industry itself had zero academic prowess, zero professionalism. And so it started really kind of going deeper there on scaling systems because I kept helping other business owners do it. So for instance, I didn't just go from like entrepreneur to staying with buying more businesses. I also found a way to leverage that target client, that woman over 30. She invests in herself, both physically and with her skills, and turned it into a 10 different business entity and ran that like a professional portfolio. So that's one way of thinking about it. The other thing is that I have to say it, there is something to be said for cash flow. I know we live in a world where debt and leverage has kind of become very sexy. And for the first time, I've met a lot of women who've been caught in that where they've overspent and under leveraged, or they've really thought very deeply about the use of debt and started kind of dabbling with those measures and metrics. But I'll be honest with you guys, I have not seen that go well for the majority. It leaves us in a whole other version of trapped and using and leveraging someone else's assets when we should be investing in our own. So I would say that's another conversation I'd like to open up is like when I think about being an ambitious woman, one of the things that I love about being ambitious is that I am in charge of reaching my fullest potential, but that doesn't mean I can't bring friends along for the ride. But it means that I'm in charge. It means that I have control. It means that I care to be sustainable from day one. So cash flow is really one of the easiest metrics as a growth expert to really get there without leveraging debt, without getting in a position where we're not getting what we deserve, or we're not even paying ourselves enough to make it worth it. And I do see that time and time again. And then there's the fit formula, which I'm going to go deeper on in just a moment. But it's really this practical way of thinking about what could your next step be. I know for quite a few of you, I'm probably poking holes into some thoughts and arguments that you had for some time. But I think the easiest way to think about a fit formula is like what works for you. That's why we say fit. It has to do with your stability, your potential, your what I call a happiness quotient, what makes you really light up. Because the best acquisitions, the best investments have all come from my own personal prowess and interest around whatever the topic was or whatever the item or the asset was that I was purchasing. So it was strategic, but it certainly was also heart-led. And I feel like we're in a world right now where everything is about like, do this trend, here's the boring businesses you should buy. And I think a lot of times it doesn't need to be boring. It just needs to be heart-led and strategic. And that's my heart to share with you guys. But let's talk about what it means to get your asset together. I think a couple of things I already mentioned, but I want to be really clear. This is after you've already done these three things, right? When you start thinking about acquiring or growing your way, as I call it, you really want to make sure you're already in a position to have minimized debt, have that not be the most important aspect of your growth, to, make sure you've got enough put aside for a safety net. And I'll go radical on this and I'd be happy to be challenged, but I would say the 12-month mark for expenses is the floor these days for making sure you have enough set aside for, the rainy day, but also to be successful and strategic, especially if you're going to have more cash and cash flow. It's usually higher than that. I like 36 months. It's a little crazy. But I'll tell you why. It's because every acquisition I've had of recent, I got the great deal I did because I had cash to bring to the table. And so a lot of times, if we're not in that financial position, we're not going to get the opportunities that we want. We don't have the control that we want to really write the chart to the next step that we want to achieve. So for me, when I think about that safety net, understanding your personal financial position means anywhere from 12 months up is really what you want to have set aside. And, I'll throw in my idea of living drastically underneath your means here because that can be, allocated a lot faster if we don't overspend and underutilize. And then lastly, it's honestly being very strategic and intentional about allocating capital for growth and figuring out what that looks like for you. When I acquire, I kind of think about it this way. Almost always. I mean, I always acquire established businesses, but when I acquire, I'm thinking about what needs to change and what's going to change, two different things. I think about what loss will happen because there is a J curve. And even if you buy a business that's established beyond that, there is a level of change begets more change. And then it's like, what equity can I put in that's sweat equity? Think about it like a real estate transaction where a lot of times if you are flipping a home, if you can force appreciation, you can actually add a lot more to that asset a lot faster. And that's something I feel like women are uniquely able to do that we're not doing enough. Less than 1% of women acquire businesses. And I'm proud to be one of those less than 1%. But I really believe that we can do that more when we're thinking this kind of strategic because we have the wherewithal to do multiple things. We have the ability to, accept change and then believe the best. And I think no shade to our brothers and friends and husbands, but they are not usually as multifaceted and as, have the ability to do that with success and with ease the way we do. And it gives us more of that financial prowess that is coming to us through inheritance and shifts in buying. But I think it gives it to us faster. So that's something I'm really passionate about and would love to go more into. I'll give you a case study of my most recent acquisition. It's called Ghost Democracy. It's a clean skincare company that I was actually a client of. So a lot of the questions I often see that come up in the community about acquiring, as an example, is like, where do I even start? Well, I can tell you that there are platforms, and I've used all of them, and they all have, I would say, more these days, more duplicative listings on there. So a lot of times you'll see the same business for sale on multiple. Some hyper specialized, like there's one called Empire Flippers that only works with a certain number of like millions of dollar assets. And then there are some that specialize in digital. That's called Flippa. And that's like blogs and websites. And by the way, my most affordable acquisition was only $30,000. That's a lot of money, but you know, that's not Rihanna money. Okay. That's not Hailey Bieber money. And actually, it was my most profitable until Ghost Democracy with regards to speed. So you really never know how an acquisition can support not only your growth goals, but also your own personal skill sets. That business, as an example, was not in my niche of fitness, beauty, health, wellness, the future of work and future of money, but it needed a skill set that I had, which was sales and behavioral science. So whether you're upskilling yourself or you're cross multiplying things that you already do well, like using my marketing agency, there's a lot of ways to force appreciation. Ghost Democracy just makes me look really good. And it's my most recent and the easiest to see how this happened. And this is the real breakdown of the fit formula. So I always think, first thing is freedom first. Like what do you need to do to define your success quotient that you haven't already? So for instance, is there a certain number of monthly cash flow that you need to, sustain the dream that you have or to do the things you want to do? But then it's like, how can you optimize cash flow? And with this business, it was actually incubated by venture capital. They spent a lot of money making this particular entity be everywhere for a short period of time. And then they hit a really hard stop where they couldn't find another buyer. And I happened to have already been using our vitamin C serum. So I was kind of raising my hand and wanting to say more and do more. And the perfect opportunity happened when they were about to literally close the business and offered me the opportunity to take it over and have cash to bring to the table where everyone else needed to get financing and bring in backers. And so the thing about this that made it so great is one, the only person on that cap table is me. So I don't have to worry about investors. But then every dollar I put in became a dollar that I put to work and very quickly found that it was profitable a lot faster than I had modeled it to be. So sometimes you model well and it doesn't work out. Sometimes you model well and it does work out. But in this case, 3 months in, we had made back our initial investment. And so everything since that, it's been over a year now, has been pure profit. And we've just been driving the bottom line. So it can look really good. I'd love to give you some ideas about how it could look really bad because when I go to the income generating investment side of things, that's the I in fit. That's where it gets a little tricky because I think if I were the prior owner in this case study, I would have said there's no way this would ever work out because they had been trying for, let's see, 5 years to become profitable, and they only had become profitable in a very small amount right before the sale because they knew they needed to show the ability to get profitable. So for them, it was very gratifying to see the business do well afterwards. It doesn't always go that way. I always say it's kind of like when you live with someone in college and then like afterwards you're like, are we going to be friends after this? Like, is this going to be a thing? And luckily for this particular asset that I acquired, they've been amazing. They cheer me on. They're always looking at what the next thing is we're doing with the business. But oftentimes that lack of income generation is why a business is for sale. And so I always think of this like, don't be the business that has to sell because you're not strategic about how you use your cash flow. Be the business that's generating cash flow from day one. And that way you can write your own next step, right? So whether you want to acquire or be acquired, I just think there's something to be said for really looking at the income of a business and thinking of that as the asset. And that's been the thing that's worked really well for me with everything I've acquired, but particularly with Ghost Democracy. And then lastly, when I think about kind of what the legacy is for a business, a lot of times, I mean, for me, I always operate out of an investment thesis of the things that I'm passionate about, that I already have the target client with. But I will say there's something to be said for thinking of the future beyond just the return and the return on investment. For instance, my kids are actually adopted out of foster care. It's something I'm really passionate about. It's opened up a whole new world for me where I joined Dreamers and Doers as incredibly entrepreneurial, and I got to meet some other moms in the community that got me super excited about maybe I could do something that would be different but aligned with my personal strengths. And so acquiring my children was the perfect fit for that. But Ghost Democracy had this heart for underrepresented people. And so we took that and made a whole legacy out of raising money for people who either have aged out of foster care, that have gone through significant abuse and neglect. And this is something we do every single month. It's just part of our ethos. So it's not just about the upside and the money, but it's also about figuring out what value creation looks like for you and what does it look like to thrive when money's in the bank and when money gets, flowing in so that you can actually build an asset that's beyond just the bottom line. And that's the thing I'm actually most proud about with this particular entity. It's not just the money, it's about the impact. And you only know that until you have the ability to leverage your strengths, to use your capital in ways that give you exactly what you want out of your career. So I have just a few more slides and I'm happy to take your questions as they come in. But I would say this is where I want to empower you to think about what your growth advantage may be, right? Maybe what you're considering with regards to how your next step can go.
Stash.
I would say the thing that makes a lot of sense is to think about it in three different ways, right? First, there's your available capital, like what makes sense for you at this time. It may not be acquiring a business, right? But just thinking about where in your investment trajectory this sits and also like what feels right for you. So it may be that you're not putting enough into stocks and bonds every single month, and that's your starting off point. It may be that you need to build up your cash reserves so you can feel really strong about your cash position first. But I think just having those conversations with yourself versus just focusing on revenue growth and especially top line revenue growth, that alone to me is a level up that really needs to be said more and more because it's the basics, but we get bombarded with these ideas of what looks good on the outside and actually what looks good on the inside is the fundamental sometimes. The other thing is operational maturity. So for a lot of us, especially in Dreamers and Doers, we're excellent at something, right? We're already skilled in a certain area. So what I think about there is like, what aspect of your skills can you already grow with, right? Whether that's taking on a partnership, bringing in another business, getting ready for an exit. Like, what stage is the business really at? What stage are you at personally? And do those things align? One of the things that's really been heartbreaking, even with 300 million in exits that I've actually advised on, is meeting someone who has a need that did not align with their wants. So, for instance, their personal life just exploded or imploded at a time when their business should have been taking off. And I see that more often now than ever before. So you have a lot of opportunities to grow your business and to get excited about life externally. I just want to remind you that internally is also part of that operational maturity and deciding like when to scale the business, how to scale the business, when to, look at your personal net worth and figure out that that's where you want to spend some extra effort. Don't be afraid to do that because I think right now we're in this female founder era where it's okay to like not make enough money because we want to have something bigger in the end, or many of us have what we call lifestyle businesses and we look down on that, or we're obsessed with the idea of venture capital. And actually, what I would really prefer you to think about is what works for you in this stage with this desire and with this skill set that you have. And that's where strategic appreciation really comes in, right? Because that's where you can find opportunities that make so much sense for you without underselling your strengths, but also without pivoting completely. I think a lot of times when I talk about the best parts of business, we're kind of stuck between where we are and where we want to be. So I often think in a 2 to 5 year horizon, that's a great time for you to maximize your growth. both internally and externally, but also to think about what are some of those rituals, what are some of those key performing indicators that you need to start putting into your daily life and business now so you can get where you want to go. One of my favorite aspects of that actually is creating a personal board of advisors, having people that are representing the things I want authentically in my life so I can go to them and ask, how was your first venture capital deal? Or, what did you do when you sold to private equity? Those are how I made those shifts and added those different differentiations into my portfolio. I would say some of this, I'll admit, has been my natural skill set where I'm kind of like a take the bull by the horns personality already, in case you're not gathering that. And for me, what felt natural, I think can be learned. And so that's why I do apprenticeship, because I really believe that so many of us have our own fit formula inside of us that we are just not giving enough attention to, we're not giving ourselves the credit, or we're just really unsure of what could be the next step. So when I think about your fit formula, it could be a mix of like, what industries are you already familiar with? Where is your own cash flow stability? What is the optimization potential of anything you're thinking about? Like, for a lot of people, they don't want to manage certain aspects of their financial life. And then for others of us, we're really excited to, but we don't know how. So there's a gap there with regards to education that can be fixed really easily in the world we live in today. But there are other things that you may need, like qualified professionals to help with. And then there's your happiness quotient. So I do believe that there's something to be said for doing what you love to do beyond just the strategy around it. But I think that that takes time, that takes strategy, and that takes intention in and of itself. And I think there's nothing wrong with figuring that out as you go because you probably have your own skill sets and things that you're nurturing as well. So as I think about finding your next best step, I want to open it up a little bit further and talk about what those three options look like. So grow, that's really the bulk of my career, by the way, whether it's for my own businesses or for others, this idea of growth through acquisition, or I call it going for growth. It really comes from going from great to better. And I think regardless of where you are, you get to decide what that growth looks like. The world I live in today is so interesting because 20 years ago when I was doing this, I was very different. I was very focused on like growth at any cost and focused on the top line and the bottom line, wanting to do the most. And now I would say growing slower has brought me more success. To make it personal, I just lost my first friend. Like I had not lost a best friend. And he died a little over a month ago. And what really made me realize that I was living the life I wanted even more than anything else was the ability to sit back and not do anything for a while, to have the financial ability to do that and to have the personal life where I loved being home and I loved being with my kids and I loved being with my husband. You guys, that's the flex of growth, right? That's the real life that many of us want, even if we're not necessarily chasing it that way. And then, of course, there's acquisition. I absolutely love looking for businesses to invest in. I try to invest one a year. It takes hundreds. This last year was thousands to even find one to invest in, and I did not find a good asset. And so, love to talk through that with anyone who's interested. And then, obviously, there's investments. I like right now investments that I can control. You probably heard that very clearly from what I shared, but that control looks differently for everyone. And that means that I also get excited about businesses that have either an impact or a client base or a unique spin on something that is a need instead of just a want. And I think that's where investment is headed versus, another skincare product and another lipstick. And that's coming from someone who owns a skincare company. And so I want to leave this here so we can talk through and answer your questions, but also think through these different issues that I see come up with the challenge around generational growth, which is financial freedom looks differently for everyone, but we all have these different things that keep us stuck, right? Some of us are in the golden handcuffs phase where like we like making all the money, but we're not sure that we can divest our attention or our money to do other things. That's always a thought process that I hear. Then there's the ability to scale the business that we have. Then there's this idea of like kind of figuring out what makes sense, right? Because we're torn between multiple different things, or we're not really sure, we're feeling uninspired. These are things I'm hearing like in the communities I'm a part of, that isn't often coming up. And I know they're uncomfortable. So you can chat them, you can, whisper them to me, but it is something I want to make sure I bring up to know that, I've heard you and I know that it may not be a one and done opportunity or conversation to talk about growth. And then there's just cultural shifts. I mean, AI has completely changed the way many of us do business. And I was an early adopter to AI, but I definitely see where the loneliness and the shifts in certain industries and business models, we're not done yet. There's more to come there. And it's definitely worth thinking about, especially if you're looking to exit or acquire. And then there's feeling like you've hit your best growth years already and kind of figuring out how to navigate that. I've had a lot of conversation around this lately, and I think this goes back to that thought process around growth at all costs, which is like, you guys, every year can't be a knockout year. Every year can't be, 100%, 300% growth year over year over year. But if we don't have that conversation, right? If we don't think generationally about our growth instead of in the 1 year time frame that we're looking at, it can be really hard to feel encouraged and inspired in the world we live in today, where everyone's sharing their highlights reel and not really thinking through what could be next and what feels authentic now, which for me has been sitting back, honoring my nervous system, sharing my growth operating system, but in a way that feels very authentic by launching my docu-series. Like none of that is like a bottom line thing. It's actually my own investments, my own money being spent just to share and be more intuitive about that. So when I tell you I know where you're at one point or another, I've been through all of these different issues and I feel really good about where I'm at now, but I still have more to go. I see a great question that came in about what a good investment looks like. Let's talk about it. It also says, from what I understand, the S&P 500 index investing and generates about 7 to 10% return over time. What are the best ways to have higher returns than that? Okay, so this is so good. Thank you for asking this question. I am not the person to tell you that you should chase bigger returns because there are times where I prioritize stability over the larger upsides. The bigger things that I'm invested in now are newer. And so I really believe the only way I got to be able to do that was like the cash flowing assets, which are really kind of low risk, right? Because you start making the money back month one. The S&P 500 is where I have most of the stocks that we're invested in. And it's stable mostly, but it's actually unstable mostly because it only kind of carries these, I think, seven different companies, which are highly leveraging kind of a trend right now with AI. And so the best time to get into the market was yesterday, and the next best time is now. So I would say having some money in the market always makes sense after you have your debt paid off, after you're financially free. But I never chase the highest returns because highest returns also means highest risk. So, like for instance, when I signed the limited partner agreement for venture capital, I can't tell you guys how many times the words "this could go to zero" were in there in some form or fashion. And actually, kudos to the firm that we did it with. They were very explicit about it and they said it in very plain language. So even when my husband was reading it, his smarty brain could get it, but then he would, show it to me and highlight it. And I'm like, okay, even I could understand that. I'm not a contract person. So I think risk appetite is something that it's challenging because I know I'm going to speak really broadly for a second. With women, we're usually trying to de-risk and have stability more. And I actually love that. That's my story. But then there comes a time where you have enough stability. So let's say 12 to 36 months of expenses in the bank, right? Money, I would say, to do anything that you need to do with the business, right? And with your personal needs. So that should be enough. And then there's thinking through, okay, how much goes into the S&P 500? I think a great financial professional can help you with that, right? Because they take their management fee and they make sure that it works for you. But when I'm thinking about higher returns, I'm also trying to risk mitigate. So I'll go back to that slide real quick so you can see how that works in real time here. But like at any point that this venture capital investment hits, it's in 7 to 10 years. So that higher return also has a longer lifespan and a higher risk. So I would say this is that ecosystem approach. I would really think about for you, one, how much is invested in stocks? I'm not an individual stock picker fan. I really like the idea of using an index fund just to make it easy and to give you as much upside to be able to stay in the market as possible. But then, how many other things can you leverage for diversification beyond that? That's where higher return comes from as well, right? Because again, I've been in the market for so long. Like I went through the 2008 crisis in the market. I went through the repo markets, which is right before the pandemic. I've been through the pandemic. I've been through this psychotic AI cycle now that we're in. And I will say there's really something interesting and exciting about the time we're in now, where there's now more opportunities than ever to find ways to get higher returns as long as we're comfortable with those risks. Startup investing is one. I use a platform called Play Money. I'm actually super excited about it because it allows you to democratize your investments by having very small amounts. Starting at $500, you can invest in startups and like they pick the best of the best that already have institutional capital. So that's exciting because for $500, you can invest on cap tables with massive venture capitalists like Bessemer Venture Partners. And so I've actually done that and I found just the sense of stability from that while also getting a potentially higher return could be one interesting way to think about it. I would say educating yourself around your long-term goals and your short-term goals are paramount because we may be talking different conversations, right? I've been work optional for a very long time, about 15 years, which means I don't need that money to return anytime soon. But I will say if you are in the position where you want to be, financially retired, or if you ever think about FIRE, our friend in the community, Shang, is my favorite person to talk about this. She's fantastic at it. And while we live our lives similarly, we approach it from different places because she's a FIRE girly and I love diversified assets and, running my fund. So like we do it different ways, but we do pretty much the same things. She will talk your ear off around getting into indexes and doing the S&P 500, but she will also remind you that she loves to just have things that she doesn't manage. So the other thing I think about with that question around higher returns is how much do you want to manage of your financial life? I will say, I'm not a fan of financial advisors that take a cut and don't actually contribute to the success, but I also know that there's a time when experts are needed. And I've paid for financial advisors for years. My husband actually took that over a couple of years ago, and it's risky and rewarding all at the same time, but it's something that he was passionate about. I was passionate about the acquisition, so I focused there. So there's a bigger picture question when we talk about higher returns. It's risk, it's time frame, it's short and long-term goals. And it's really kind of immersing yourself in those additional strategies one by one by one. I'll just hit a couple before I move on, which is like, honestly, the basics were easy to get information on. Like all the big companies, Vanguard, Fidelity, Charles Schwab, they do a great job of really getting you knowledgeable about your stocks and bonds. And like I said, Shang is a great resource for that because as a fire girly, she's all about those stocks and bonds. However, when I think about the more alternative investments, this is where you want to almost subspecialize yourself and really go deep. There is a couple different podcasts on, gosh, I will send it Lucy for afterwards. There's a professor who talks specifically about venture capital. Her stuff is amazing on YouTube because it's not sponsored. It's not like making it sound exciting, but she goes into the nuts and bolts and the data around venture. That would be a good one. There's also a venture capitalist that I love. Her name is Laurel Mintz, and she does a lot of education on venture for women as an asset class. She calls it an access class. Her VC is called Fabric VC, and she does a lot of stuff also for free on YouTube with education. And she does this better than a Birkin talk. That's amazing if you're able to get a hold of it. That would be another way to really get to know venture, which I would say is one of those really risky, you return the entire fund with a couple of investments. Private equity is interesting because it's similar to venture with a very specific slant. I feel like nobody explained this to me for a long time. Venture is the beginning of a business's journey. Private equity is the end. So usually private equity will buy up a business that's already successful or financially successful with EBITDA or profit, whereas venture is funding a business to get started. So they bookend kind of the business journey. I like both for different reasons, right? I like venture for the big upside potential. I like private equity because there's often oh gosh, of course I'd forget the specific phrase, but there's a guaranteed return where you know exactly what they've guaranteed in your agreement before you ever get started. So you actually know how much you'll make back in addition to upside on other parts of the investment. So that's always an interesting one. It's a little harder to get into these days. Their minimums are quite high, but an interesting one as you start thinking about highest return. And then I didn't touch on this today, but I actually really, really like the idea of franchises and franchising, especially when you're already good at business. And it's not because you need someone to tell you how to do a business. It's because a lot of franchisors are stuck and they may need your skills. And so I've been using skill investments with franchises to be able to leverage a piece of their upside, or for me, a piece of their royalties, in order to grow a different income source there. And that's one just to share with the community. You guys all have a prowess. That's why we're dreamers and doers, right? We're equal parts dreamers and doers. And so that could be an interesting one as you think about not just franchises, but businesses in general that may need your skill and your services and would pay that out with revenue percentage, royalty percentage, or even sometimes equity if they're raising and growing. So that'd be another interesting one where it's high risk because you never know what can happen. I've had some that go really well, and I've had like my very first one, which they never returned, but I put a lot of time into it. But it was so many years ago that I had the time to recoup the loss, even if it was just a time loss. That'd be another interesting one. Other questions? Anyone willing to say where they're stuck? I'll tell you where I am. Because I'm work optional, I have a hard time not working. I love money. I like putting it in the bank and having it bother me, but the thing that bothers me the most is always tax. So tax strategy is a big part of what I do now. Not for myself. I have a tax accountant that really looks at all aspects of like, what are our businesses bringing in? Why is there so much profit? What can we buy? What can we invest in to offload that? And so tax is always the thing that just drives me insane, especially even with all this level of growth. So that would be one for me.
Um, I didn't know if I was supposed to put it in
Yeah,
the chat.
girl,
I
come
think
on.
I did.
You're fine. Yeah.
So
Here, I'll put my
I
information up here so you guys can find me afterwards as well. Yeah, go
okay,
ahead,
yeah.
Natasha.
I was gonna ask that where I could find you after. So I started my consulting fractional business in 2024. Thankfully, I was able to, get clients like within like 3 or 4 months. It's pretty good. But I am stuck right now because I do want to either I can't figure out what I want to do. You talked about like alternative investments. I've been going back and forth between starting a holding company to start investing in real estate or buying a business. And it's something that I want to do this year. So I have set money aside just for
Cool.
that. But I just don't know. Like I'm really stuck in what direction to go into.
Yeah,
I've been in HR for about 20 years. That's what my business is, HR and business operations. I've been
interesting.
very senior. I've worked in asset management and startups, so I do know what it looks like to scale a business.
Mhm.
But I'm just, I haven't gotten past, what the next move is.
Have you been in diligence before? Like just kind of seen a startup and then kind of get into their data room and see what that's like?
I have not on this side, like on kind of
Yeah.
like as the employee that's helping the CEO scale.
Okay.
I've done that. Like my expertise is actually like global HR. So I've gone to other countries and helped, them establish entities, work with like lawyers in those countries, swapping over like
Cool.
ending agreements with employees in other countries, but I haven't done it like from this perspective as an entrepreneur.
I don't know if that would get you unstuck, but oftentimes when I talk to other women and that's the area in which they're stuck, I tell them to go find a business that they would acquire, right? Go do the thing without having to do the thing. And
Mhm.
so one of the easiest ways to do that is go look at a pitch deck of a startup that's raising money and just figure out like how does that feel? What are the questions? Where do I feel strong? Where there's two platforms I use for this, by the way. One I mentioned, which is Play Money, which is totally free. You can get on there, you can look, you can lurk, you can get pitch decks, and you can get like the 17 to 20 founder videos, and it gives you a chance to like in the best way, live action role play what it looks like to go through acquisition without actually having to do it. The other is Cherub, which is more marketplace driven. It means you have to go through this like double opt-in, hey, I'm interested in your business. Are you interested in me conversation? But they have these great connector tags, which means you can actually look at businesses that need help with HR as an example, or have that as an area of opportunity or an area of prowess. So you could say, hey, I want things in the, actually have a friend launching a business based in the career space. So let's definitely talk because she's literally about to go live. And so it'll give you an idea of like what she did is she productized her knowledge. So she took a 15-year career and turned it into a tech platform that she invested in herself and is now raising investment on. So my thought process is you potentially getting unstuck probably comes from a little bit of like figuring out what it feels like to make that first step without actually having to make it. And those are two free ways to do so that has definitely helped me even figure out. Sometimes I think I'm on the strategic investor tip, and then I'm like, you know what? I need to go back to what I do, which is acquisition. I need the control. I need to be able to have like the ability to do what I need to do, how I want to do it. And I can't always do that as an investor, right? I'm more of a check and support, whereas sometimes I want to roll up my sleeves and actually operationalize the business. And that's one of the easiest ways for me to figure that out is like reviewing a couple decks, seeing where they're strong, where I feel strong, and then kind of knowing where I want to go next. That would be one thing to think about. And the other thing would be like, if you haven't gotten on the platforms, even to see like what's on there for what's available right now. That's been the hardest thing is that depending on your buy box, how much you want to spend, right? And how much you want to invest, it's tricky right now. It seems like everything good goes quickly and it goes to people with like debt. And that answers one of the questions that I saw in the chat about how I finance my acquisitions. I finance them with cash, literally cash. And the reason for that is I've seen the SBA loan go well, and I've also seen them go poorly. Um, and a lot of times they go poorly because, you just don't know what you don't know, especially for that first investment, that first acquisition. But when you've got cash, you've got a bargaining chip that most people don't. So it allowed me to buy a lot less of a business, or I should say a lot more of a business for less. And it allows me to be really nimble and thoughtful about, when I get my money back, I know where it goes. I don't have anywhere else to pay. I don't have this like distorted mindset about what that turns into. It's just like, this is the acquisition, this is what I'm doing, this is how we're financing it, and this is how we're going to get the upside. And it also, I will say this time, it made me, I think, even more successful because I didn't have like a large debt note to pay off in between all of the additional profit. But I would say also, I'll throw one more thing in there, you guys, which is maybe we need to have these kinds of conversations more often where we're like, dropping our guard and saying, here's where I'm stuck. Because I'm sure there is someone who's exactly where you are right now, Natasha, that would be like, yep, this is what I did. This is where I was. This is where I need to get there. And I think sometimes it's really hard to be in these rooms with all these really successful women where we're like all needing to have it all together. And actually, I think sometimes just getting together and saying, hey, I'm stuck about this. Or like, here's one that I haven't mentioned is like, I don't love stocks because I don't love, I'm a control freak. You figured that out, right? I said control like 8 million times. But I've also wondered like, man, is the S&P 500 really the best place for the stocks that I do have, right? And so I've been having that thought lately. I've brought it up to my husband. I've asked him, like we do a lot with precious metals as well. We like, I like tangible assets. I'm sure you figured that out too. And so we've talked a lot about like, well, what does it look like to stay in these like indexes where like seven companies run the whole 40% of the upside? And it's like, oh, maybe we don't. Like maybe we figure out a way to de-strategize from that, or get into treasury bonds or something like that. Like he led the charge on that. I won't take the what's that called, the recognition for it. But what was interesting to me is that he was like really all in on one investment strategy, and then quickly maybe a year or two ago, said, "Wow, by the way, you guys, like." Treasury bonds are giving great percentages right now, anywhere from 3 to 5%. It was 5, and it keeps kind of every time the Fed cuts the rate, it goes down a little bit. But boy, let me tell you, that's one area that I'm like, man, I'm glad we did that, but maybe we should do more of it and kind of work through those two different aspects of our growth where there's the fast growth and there's the long-term growth, but then there's also the stable growth where it's just like we know what we know what's coming back. And that would be another thing to consider as well, is like recalibrating our portfolio is a regular conversation, like every month, to think through like what do we do next. So I try to never get to the point where I don't know what's happening, but also that I'm not planning for my next acquisition or opportunity. So that was hopefully helpful. I see something cool here about deal flow, and I totally agree. I've been asked this a lot lately, and I would absolutely love it, actually, Lucy. Let's put that on our follow-up because I think just even like once a
Yeah.
quarter or something, like just going through deals together. Like Natasha, I tell you, it's a muscle that once you start flexing it, you may be like, I know exactly how I want to do this. I know exactly the path I wouldn't take and I would take. And I just feel like there's nothing out there right now to be able to do that. But I've got the ability to like share my screen, everybody bring a deal, let's talk through it. I just started doing this with a really awesome creator, and I think she's going to share it to her podcast. She's on the Dear Media Network. So I think that'll be a fun way to get, even more interest and excitement around acquisition and just growing our own assets our way. So that would be really fun. Other questions before we jump off, or send me a chat so I can follow up with you if there's something you wanted to talk through privately. A lot of times, I'll be honest with you guys, in this conversation, there's almost always something we haven't covered that someone's like, God, I wanted to ask you, but I want to ask you in front of the 40 other women in the room, right? So like, feel free for you to reach out to me in Dreamers and Doers. I'm active in there. I've had a rough season this last month with losing my friend, but I'm back. I'm building back better. And I'm actually planning on doing quite a few things out in the wild this year. So Katrina, I'm going to be texting you because I want to see if you want to do South by Southwest again. So I'll be there. I'm based in Texas now, so I'll be in Austin. I'll be in New York in a couple of months. So like, let's just find a way to keep these conversations going. Like Maria said, I think it's so important that we make space for that, and that we also think through like, how do we get unstuck, right? It's for me, it's always like tribal, it's in community, it's like throwing spaghetti at the wall, it's not being sure for a while, and just being as open as we can be about that, because I'm stuck in all kinds of areas. This is just the area that I'm good at. We can talk about my Hot Mess Express another day because that's obviously something that I'm always going to be working through as well. So thank you guys so much. My heart is just like overwhelmingly joyous with being able to share with you today. And honestly, I get nervous to share sometimes with a group of peers because I see you guys as just amazing women doing badassery in the world. So I really mean it when I say, please look me up, send me a DM in the platform. I'll start a thread about South by Southwest because I'm there, and I'm a part of a couple of like dinners and events that are looking to invite other women in our community. So that'll be fun. I'll look forward to seeing you guys again really soon.
Thank you so much, KK, for just pouring out all that advice and your own story and offering to follow up more and deal flow quarterly. It's awesome. Let's shower. I've been seeing lots of emojis and thank yous in the chat, but showering even more gratitude on KK right now. Thank you.
Thank you.
Um, I've also in the chat, you can find obviously on the screen, you have your contact, but I've also tagged your circle profile. And if you'd like to give feedback on the event, or throw your hat in the ring to host one yourself, um, you are welcome to do that. So thank you again for your time and for all of you for joining and learning. And I hope you have a fabulous week.
Thank you guys. Thank you for being so present. This is my first time kind of getting back to work for a while, and this is not work, so it felt amazing. But thank you guys for your questions and being so honest and vulnerable today. Just even getting off the mic and putting in the chat. I know this is a conversation that needs to be had, and it just fills my heart so much more. So I'll see you guys soon.
Thank you.